What's up, YouTube? 2 Mogul videos within 24 hours. These are exciting times. Yep, it's Joe Ketchpalia, still sitting on the couch, still making some money investing in fractional real estate online, as usual. So if you saw my video earlier today, had my portfolio review as far as like my dividends for August for Mogul. They also put out a new property today, which is selling out incredibly fast. So I wanted to get a video out as soon as possible. Honestly, I think it's 2/3 sold out. So hopefully somebody sees this while there's still an opportunity to buy some. If you are a member of our Discord, Ike shared a lot of this info in the Discord for Mogul today. So if you're not, I'd recommend jumping in there. If you don't know how to do that, but before I forget, please like and subscribe. In the description to this video is where you'll find the link to that Discord that I have set up. You'll also find links, referral links for Mogul and all the other sites where I'm currently invested in fractional real estate online. Please do your own due diligence on all of those platforms. Don't just invest in any of these because I do. I'm sure we have different risk tolerance, different time horizon, all sorts of stuff. So you want to really check into it, make sure it's right for you. I'm just trying to share the way I'm looking at this stuff. But you want to, check into it yourself. So one thing, this is the OutKast, and they are at least giving us an old enough reference that I realize this is a band, right? I mean, this is, they were popular, sometime between college and grad school for me. So that's, I don't know maybe they still are, and I just don't know because I don't know anything about popular culture anymore, but I thought that was great that I think that's what this is in reference to. Maybe there's something new where they also spell it with a K. But anyway, pretty happy to see that. It wasn't just completely clueless where the name came from. Maybe they're from Atlanta. I'm not positive. This is in Park Grove, which is West Atlanta. It's another Padsplit. It's 10 bedrooms, 6 bathrooms. 4 of the bedrooms have their own private bathroom, and then the other 6 bedrooms share the other 2 bathrooms, which is great. The 3-to-1 for the 2 shared bathrooms is perfectly fine within Padsplit standards. And whenever you have the private baths, those rooms always get a premium. So I think that works really well. Now I do want to mention, as I've mentioned several times before, I do get a little nervous when you start to have 10 bedrooms, somewhere around there. If you have a single family property and you start to have, just a whole bunch of people there. I know Atlanta, the Padsplit model is really well proven in Atlanta. So it's one of the places where I'd worry about it the least. But I think as, people continue to push boundaries and have more and more people living in a single family home, I do start to get worried. So my preference is to invest in the ones that are a little bit less. I like the 6. I've bought some of the 8s. I've avoided anything that's bigger than that. But I think that, that might just be being overly prudent. I mean, it just depends on what your risk profile is, right? But yeah, so year 1 average yield or projected yield, 9.7%. I think it's actually 9.67 when I looked in the model. They said this is actually below, they're underwriting below what the T12 actuals are, which is fantastic. They continue to be, they continue to seem conservative in their revenue projections, which is good because like days like today. So if you watched my dividend update, this was a little bit of a disappointing month. Based on their communication, it seems like it was expected. And I know, especially for short-term rentals, August might not be the best month in a lot of markets. But I think that they did have, they're having a little bit more occupancy issues in a couple of the Padsplits than I would guess they didn't expect some of them. Although some of the Padsplits are doing amazingly well. So it is still, if you compare the two business models that they have on their platform, at the moment, it seems like on average, the Padsplits are doing better. I'm still investing some in both. One, I think that they'll probably, in a stronger economy, you might see the short-term rentals do well. I think as the economy softens, you'll see the Padsplits do better. I think it's kind of good. They're sort of attacking different segments of the market, and so a little bit of diversification there. Okay, so let's see. One of the things that I noticed is they don't have, they've got some pictures here. One of the things I've mentioned before, if you click on each picture, you can expand it so you can see a little bit more. I would recommend you take some time, look at every single picture. Ike actually mentioned this. One of these doors looks small. I don't know if that's just the way this picture is, but yeah, I mean, this is, or if this is just a weirdly small doorway that I certainly wouldn't. It doesn't look like I'd fit through this, so I don't know. It's kind of a little bit odd. But not a whole lot to complain about in the pictures. I wanted to point out the Padsplit listing shows this as the kitchen. I love that they have 2 stoves in there. They've really thought about, okay, what if we've got a lot of people using the kitchen at the same time? But anyway, it seems set up pretty well. I'm not going to go into the Atlanta market because we've covered it a lot of times before. But I shared a link for the Zillow home price trend, so I think might as well share that here, right? So I really appreciate, anytime you guys put some due diligence links in the in the Discord. It saves me time. I can just pull them right into this, and but so this is the zip code, right? I didn't even double check. I've just come to really trust what he's putting in there. But yeah, right zip code, of course. And so home prices have gone down considerably over the last year. The median home price in that market, if you look at this trend line, this is something. It's very, very similar shape to what we've seen in a lot of markets. Although it is a little bit more of a dip right now. I think we're seeing this in a lot of markets. I think if rates continue to come down, we'll see a little bit of a change in that. But we'll see. I'm never trying to predict the future. That's just my guess. Okay, so we got that. What else do we want to talk about? The location. Oh, one of the things. So this didn't even talk about purchase price. It is $419,000. I was going through the contract. They do have an appraisal gap again, just like they did in the last one. This time only $10,000. So if it fails to appraise, but it's within $10,000, Mogul will, or not Mogul, but we will make up the difference in our purchase price, right? We're willing to bring that much extra cash. They actually disclosed that in the description this time, which I think is great. I think I had called them out last time for not doing that, and it's, they stuck it in here now. Have no idea if someone there heard that or if it was just an oversight last time and they didn't have the same thing now. But I think it's the right thing to do, right? Anytime you have something a little bit different than your normal, they've got that in there. But then they mentioned they also have a $10,000 seller credit in the contract that is not, it's not even accounted for in the underwriting. So oh no, I just closed that. Makes that deal a little bit stronger. I think I can just click on this and that's going to open that back up. Don't make me log in again. Thank you. Okay, cool. Mogul used to make me log in constantly, but it doesn't do it so much anymore. Yeah, I wanted to point this out. Already $140,000 raised. What is the total raise that they're trying to do? It's going to be $214,000. So don't let the FOMO get you. Do all your due diligence. If you miss this one, they're going to put out another one. I mean, Mogul has very consistently put out, good deals in my mind. And this is very similar to what we've come to expect, right? 15% average yield, 14% IRR. I always mention I don't really like average yield. I like looking at the year one yield and the IRR and your multiple on invested capital, but they always put it there. It's not the end of the world. One of the things that's good to notice about that is, it lets you know, okay, if we have to hold this long term, what is our, if we have to hold it longer than expected, it's not really going to hurt our IRR because our yields just get cranked up over time. So it's good to know, right? Most of the return is coming from the yield, not from the sale at the end, not from the refinance, where they do have a refinance again. As always, you've got the, a good vacancy reserve and also a maintenance reserve. We saw this come into play on a couple of the properties that I have this month, right? Two of the short-term rentals, two of the Houston ones didn't do so well, 0 dividends this month, and they didn't even cover their debt service. So that's why it's really important that they have, they have these thick reserves on all these properties. Then the miscellaneous cost, this is usually the Padsplit fee, right, is what most of that is there. They always model this refinance, and I always shut it off just to see how much different it is. And okay, I mean, we barely move here, right? Which is why, I mean, I think it's perfectly fine to model a refinance, but the way the world works right now, as far as pricing, it's not really moving the needle very much. And, they're assuming sometime in the next 5 years, they're going to be able to refinance at 5%. I think it's a relatively safe assumption, but you never know, which is why I don't like doing it, but I think it's perfectly fine that they do. And so, yeah, you get down here, levered cash on cash yield, 9.67% year one, unlevered yield, 8.18. I mean, these are like, I've been looking for a deal like this in my market. It's so hard to actually consistently put deals like this together. I mean, my team is working all day, every day to help clients in my market find deals. And, it's really impressive that what they're able to do here as far as, just yields go. Now, one of the things I do think that because of their focus on yields, they're often willing to go a little bit further out there on the value side than I'm comfortable with, right? So, and this is another example of that. This is one where, and they always do have an appraisal contingency, like we talked about. This one they can appraise a little bit shy, but okay, we've got 419 purchase price. Zillow thinks it's 326. I don't know. That seems really far off. I did want to, I looked in the public records. They they have the size right. Zillow's got the right size, 2152. But what they might not be giving it credit for is this full finished basement of 1,200 square feet. I think that's how we get the extra bedrooms. Because this says 8 bedrooms, 3 bathrooms. We actually have more bedrooms than that and more bathrooms than that, right? So, and as a reminder, usually that triggers me to want to go and look into, were the additional bedrooms and was the additional square footage done with permits and everything. And that's something that Mogul has said in the past that's part of their regular due diligence. And so until I find an instance where they haven't actually checked on that during the due diligence process, I'm not going to go and do that, do that same thing myself, because a lot of times it's cumbersome. In some cities, it's nearly impossible to check those records online without just going in. And so I'm just taking their word for that. Over time, I've come to trust them a little bit, and that's one of the things that I think makes a lot of sense. The other one is their process with the property inspections. We know that I don't think most of the time they don't even post the inspections anymore, but it is because we know anything that comes up in the inspection that is a should or a must repair type item, they're going to either get the seller to do it or get a credit for it. So just knowing what their process is makes it so we don't have to go through and be like, oh, well, what are they going to do about that? Because we know, okay, that's going to be addressed. Let's get some of these out of the way. The FEMA flood map looks good. Looks like we're not in a flood zone at all. The spot crime map. This is one of the best crime maps I've seen in the Atlanta market. It had to pull a pretty wide area. And like when you see this, like, oh, well, that's the rough crime map because this is not, it is actually going back 3 weeks 3 whole weeks. So that's pretty far in Atlanta, especially in a couple of the markets we looked at. This fills the map in just a couple of days. But also too, if you really just zoom into this area, okay, we've had really nothing in that, in the immediate area. You have to go pretty far outside before you start to see a lot of those icons. So definitely like to see that. It makes me I think this neighborhood is quite a bit different from a lot of the ones we've seen. I think if you think about like the Prince, that was one of my worries on that one. But there's been some others. Why isn't that closing? All right, there we go. I'm just closing some windows because even the new laptops doesn't like me to. I guess the screen recorder just uses a lot of something. So I was blaming my old laptop all the time, and maybe it was doing pretty good for how old it was. Okay, and so when you look at the map, you can tell like, wow, we have a whole lot of green space. Let's see, though. We've got this silly little thing here. You guys probably can't see that. Have to move it out of the way. It's right here. And so one of the things we always want to think about is what the parking looks like, right? And so, okay, we've got 10 bedrooms. Well, this driveway, you're definitely not parking 10 cars, and you don't want them to have to move a car in order to park there. So you really, this is really only parking for two, maybe three, if it looks like there's sometimes cars parked off to the side, or maybe four. But then there's obviously some street parking here. Not not a ton attached to our lot, right? Because the lot line, like if you look it up, it seems to end around here and around here. So we don't have a lot of frontage. But this is just the back side of this other person's lot. And so there's parking there. And then this piece here is actually, is property that belongs with this house. It looked like this whole section. But I don't think, I think if you're parked down here, it doesn't seem like this is going to bother anybody, right? So it seems like there's perfectly, the parking situation is going to be perfectly fine. The bus stop is a mile away, according to the the Padsplit listing. It's a little bit further than I like, but when you looked at the pictures of the neighborhood, like it's obvious, like okay, yeah, you're kind of just out in the woods, right? Like it's a nice little lot of green space near you. And so, yeah, you're not going to have a bus that stops right there. Maybe you've got to ride your bike to it. Some people will just walk a mile. I'm not doing that on a regular basis to go, to get on the bus, but that's just me. So I would expect, the parking to be pretty important. And that's why I really wanted to check this out. But it seems like I don't expect it to be an issue, right? I mean, I could imagine if this neighbor wanted, if you had a neighbor in one of these homes that was just somebody who liked to complain about stuff, that they might. But even though street parking isn't necessarily tied to the home, right? It's not as if like just because that's their lot you can't park there. It's just whenever you're doing something like this, you always want to, with your property, you always want to be a good neighbor as much as possible, right? And disrupt the neighborhood as little as possible. That's one of the things. Like I was talking to Padsplit on the phone the other day, one of their employees, because I'm looking at doing one here in town, and that's part of their thing, right? Like they want to be a good neighbor. They want to not have complaints and not have people like report them to the city and whatnot. And so making sure that we're not just congesting the street with all of our cars is important. And yeah, so pretty happy with what that looks like. That's way too long of a parking discussion for me to just say, yeah, I think it's fine. But, and just so you can see what I'm talking about here, this is like just the width of the driveway. So all these spots where we can park, it's really just not your lot, right? All right, let's see. What else did we want to talk about? This one's, it's pretty straightforward. I'm getting very used to, I'm starting to really trust them. I've got quite a few of their pad splits at this point. I did look at the listing. 0 rooms available, so it does appear to be completely full. This home is fully booked. All rooms currently occupied. I think that is how it's described here as well. I don't know. If it is, I'm just missing it. And that's one of the things too, right? It does come fully furnished. When we're looking at values, right? Like that's something that we're getting in our purchase price. And so that's one of the things, even though I don't love paying more. Oh, did I go into each of these? I think I did, right? Zillow's thinks it's 326. I might have gotten sidetracked, right? Realtor says 382, and then Redfin says 400. Yeah, 400. So I don't know. I'm pretty sure I got off track, but we're at least within the range of what Redfin says. Yeah, I feel like we are paying a little bit more than any of the platforms think it's worth, but we do have that appraisal contingency, and it really is, again, when we look at the model, our return is coming from our yield. Almost all of our return comes from our yield on this, right? We're not counting on getting some. They do have appreciation built in, but it's over a 10-year period of time in a market like Atlanta. It's really hard for me to believe we're not going to, achieve an appreciation of somewhere around 3%. But if we're starting off a little bit in the hole, it could be a problem. Um, that's one of the things that I find, like I said, most of the ones that I've passed on Mogul, that's been why, is that I just don't see eye to eye on their valuation. I can't think of a single one where their projections as far as revenue seemed off to me, right? Like that's where that one is. I think they're more conservative on that side than they are on the value side. But again, I think it makes sense because if you just have to hold it longer if you don't get to the value, right? Like, and if you're getting these fantastic yields, you can do that. And I think a big part of their thinking is as there's more adoption of this model, investors in the future are going to be willing to pay more for the properties, just like they are for this higher yield. So, I don't hate it, but I have been trying to avoid the ones where I'm a little bit worried about the yield. So I guess let's already just start to wrap this up, right? What do we have? What are the in general? I like it a lot as far as I like that it has the 4 private baths, right? The 4, like I think those ones are always have a premium, and I believe they also lead to longer stays. I really like what they've done in the kitchen, right, where you have the multiple stoves. So I think there's a lot to like about this. For me, I've been trying to avoid the larger bedroom count ones, even though in general, I think the more bedrooms that you have in a single home, the easier it is to start to get to those higher yields. But I do get nervous about, some future regulatory tightening on this type of model where they say, sure, you can do it, but you can only have 6 adults or 8 or whatever the number is. I think that the smaller the number is, the more or the less likely that you'll have problems with it in the future. Between that and the valuation, I think I'll probably pass on this one. I also want to spend a little bit more time watching the ones that I've already bought and see if we continue to have a little bit of softness in the occupancy like we've had in a couple of them. Like I said, some of them have been amazingly strong. Like if you watch that video about the dividends, some of them are tracking, very solid, mid-teen annualized returns, or well into the well above 10% annualized run rate for yield. But some of them are have fallen off quite a bit because they've had some move outs, and they've had when you have a new tenant move in or a new member, because in Padsplit they're members, not tenants or guests. When you have a new member move in, you have that 10-day fee that Padsplit charges. And so, definitely saw how that can impact it a little bit. So turnover is a problem. That's the thing. Like all of the fractional real estate investing that I'm doing is an experiment. I don't need to put this capital to work, right? I'm trying to figure out, okay, where's the best place for me to put my money? This one, Mogul so far has continually impressed me with the quality of their deals, but I don't have to invest in every single deal they put out, right? I'm being a little bit picky, and I am going to slow down maybe just a little bit just to see, okay, what happens next month. Was this just a dip because it's August, or is this a little bit of a trend? I don't think that I still like what they're putting out more than really anything I've seen on any of the other platforms, right? Like if you compare it to the average deal on Arrived, like there's just so much, they're so far beyond as far as from a yield perspective, the business plan. If you compare it to Lofty, I just think that it's, their average deal, again, just the fundamentals of the deals are so much stronger. At the same time, I'm not comfortable enough. I'm not putting my full net worth on here or anything. And, I would never I don't think I'd ever do that, right? I'm really hoping eventually we have 4 or 5 platforms like Mogul that I'll be able to spread my, my money across as I start to pull stuff out of real world assets and put it into fractional stuff like this, which is the goal still. I mean, as long as we can get the type of performance that it seems like we're going to be able to get on Mogul over the long term, they're going to keep getting my dollars, and hopefully, hopefully we see some of the competitors catch up. Like, I mean, it's mind numbing to me to see like how what you're actually seeing is there's more people jumping in and copying Arrived, and like there's a lot of those platforms that just seem very much like Arrived Homes, and now a couple out that are like, okay, maybe that's copying Lofty a bit more, um, but they're not. There's not another one at the moment that I'm seeing the same caliber of deals on a regular basis, and I think that's what I'd like to see more of. So hopefully we will. Anyway, I know you guys hear that from me all the time, but there's new people that watch this all the time. Oh yeah, thank you for watching. Please like and subscribe. Please feel free to comment on whether or not you're going to invest in this one here, or jump in the Discord and talk about it. I am getting a lot of value out of that now. I really appreciate everybody who participates, who shares their thoughts on stuff. There's always stuff that I'm going to miss on these. I'm trying to share, all the steps that I go through, the things that I think about, but there's always going to be other little angles. And especially like one like this today, like I just wanted to get something out here fast because there's not a whole lot left of this one. And so, it went from $0 invested to 140,000 just today. And what's the total we're looking at? 214,000, right? So got like 74,000 to go. It's great. I mean, obviously, there's a lot of demand for their product because they are the only ones that are putting out a product that I just think makes a ton of sense from a fundamentals of the real estate. The markets they're picking, the business plan, the fact that their yield greatly exceeds their debt. The way their underwriting appears to be conservative, they're able to provide those yields with, very substantial, on top of very substantial reserves, all those things. So anyway, I know I come across as too much of a fan. I mean, they did send me a free hat, so like, how could I not be, right? Always have to wear it for the Mogul videos. If anybody else wants to send me a hat, I'll wear that hat during your platform's videos, just so you know. So unless it, looks stupid, because I actually kind of like this one, even though it took me forever to realize that's supposed to be a home. I think that's the shape of a home inside of here. That was not clear to me at all until I saw it on the hat. I don't know why. Anyway, that's it for today. Until next time, I'm going to keep making mistakes so that you don't have to.